Alright, so in this video, I've called it Order Flow Tricks and Nuances to add to your trading arsenal. The reason why I'm doing this video is because I'm planning to kind of go over certain aspects of order flow that, how to look at the dome, what to look for when you want to put your entry, which price, and at which level, and then reading the current market is so important. That's how I emphasize with traders where you really need to understand how many ticks back and forth are we going when the market is trading. So we're going to look at some rotations, some little nuances around bids, offers, how they stack and they pull, some demonstrations around examples of how I watch the dome and what I look for. Again, all this is kind of like automated for me because it's something that I've done for a while and I kind of see it quickly, but I understand where a lot of traders ask me like I'm just seeing a full bunch of numbers here and I don't understand what's going on. So I'm going to cover the details of these here. I'm going to try to explain to you guys how I would read all this. So let's jump into that. So I took a scenario here from basically Friday, 14th of May. Let's just see. So I was just in a micro trade here, which I flattened, which the market didn't really do much. So if we demonstrate, the great example that I'm willing to cover here is that just have to play around with the video a bit here. So here's the context of the market here. We've got a market where, it's moved up quickly. Look at where I've got my mouse. So I'll try not to move. This is recorded. So if you're looking at the mouse here, if I just stop it for 2 seconds, let's just put this on pause. You've got my mouse here, right? As you can see, you've got my mouse around the 51.25. The reason I put that is because I had basically the idea of already recording a video for this, and I had the fact that with the current volatility here, so this is Sierra charts just behind my dome, the market is telling me with the way it's rotating that it actually wants to basically rotate around maximum 5 to 6 ticks. So I'm always calculating approximately from the current price what would be an area where I would want to enter. Basically, I'm trying to enter long because mostly the market's been moving higher and it's been a contextual day where the bonds are range bound, and then we've got euro that's range bound, gold that's got pretty much a range bound market, and in if you look at the table of the whole day, mostly every dip has been bought by the buyers, and it's been that kind of easy up thrust kind of day. So if we let as the video plays, I'm going to basically demonstrate what I'm looking at here. Again, I'm looking to have a entry at that price. So if I was to put an entry at that price, just look at how the market the offers and the bids, how they're stacking and they're being pooled. So in this case, what I do is the 51.25. So to make sure we're on the right page, we've got the ES here, we've got the NASDAQ here, we've got the bonds. My demonstration is really on the ES for the bids being pulled and all that. I've got here the snapshot that's telling me that mostly the bids are stacking, okay, versus the offers. So if we just take the snapshot of the market here, we've got a downtick in the ES, we've got a downtick in the NQ, and then quickly on the bonds, we've got a downtick on the bonds as well. Okay, again, it's just visually to be able to see what's going on as the bonds had basically lifted off their lows. There was actually a bit of absorption here that I spotted quickly just before the video. I recorded this here, and just to give you guys a contextual, I'm looking to buy the 51.25s. I'm not putting a trade here. I'm just demonstrating you guys how at the 51.25s, you always want to look at the one tick above my 51.25s. What kind of uh, uh, pulling and stacking occurs here at the 51.50. If the market is basically, trading within a certain range, a certain number of ticks, the question you always want to ask yourself is when it's getting to my entry, if it bounces off, what kind of a bounce do we get? Do we get a bounce of 2 or 3 ticks? Do we get a bounce of 4 or 5 ticks? So it's really to see that strength if the buyers are basically buying at the exact amount of ticks rotation where I want to buy, So if you were to come to an example here, let's say the price is at 52.25, the market gets to 51.25. I believe in this example, the market never really comes to my 51.25, which is actually a signal. That's something that the market's telling me. The market's telling me, one, I'm being too, I'm not aggressive enough. That's one. And two, it actually is not filling me at a lower price, which means highly either the buyers are really aggressive or there are no sellers in this market. Okay, and anytime the market's finding sellers, it's basically coming back 4 or 5 ticks because the strength of the buyers are buying the dips. So I got a question from one of these traders who said, all the movements that's occurring here, where you've got the tape moving, you've got the dome moving, it just looks like it's a bunch of numbers floating all over the place, and I don't know what to read. Well, first of all, you need to have a structured way to learn this, because if you were to just learn this, the best thing I would suggest is you forget the tape, you forget everything, you just put on a dome. Here's an ES dome, okay? All you do, I'm sorry, that's not the dome. Here's the dome. So we'll just put this aside here, 2 seconds. I'm sorry for that. So you've got a dome. All you do is you just watch for a whole week. You could put aside an ES dome, you can put an NQ dome. For a whole week, you just look at this. This is the reason why I use Jigsaw, because Jigsaw, I believe, has a great tool that's able to give you a very good, clear, visual way to have a nice dome with the customizable colors and effects that you want. Look at how the market is refreshing at this 66.25. We were at 80s, 90s, and then we moved to 133. Quickly, if I was to get my snapshot of the bids, and we've got the offers that are stacking now. Okay, so the offers in the last 5 ticks are heavier compared to the bids, but the market's still upticking. So the market's not really moving lower. It's telling me how, look, we've got a 1 tick movement to the upside, and then 1 tick to the downside, and then I could hit this here, and I could just erase all that and just have a refresh, a new visual way to see what the market's doing at the moment. So for a whole week long, I'm telling you, just in 1 week, you're going to understand a lot from just looking at the nuances. Don't even put a trade on. Just have a nice dome. It could be with Sierra charts or with Jigsaw. I highly suggest the Jigsaw because I really like their dome. But if you're new and you don't want to start paying a full license and all that, Sierra charts is basically really good for beginners. And all you do is just have NQ. If you want a snapshot, or in worst case, not even a snapshot, just look at a dome like this. For a whole week long, just look at this. First week, you might see some nuances, you might not. Second week, third week, you're going to start seeing stuff. Now, for a full week long, you only look at the dome, the volume profile, the bids, the relationship between the bids, the offers, how they trade. This is how you're going to learn this. If you don't take the time to learn it, if you say it's too complicated, you're going to have to put the effort and of learning into it, for a couple of weeks, couple of months. Once you get it, you'll never go back to charts again. You won't trade off a chart again. Believe me, this is really important stuff that I'm giving you guys here. So let's come to back. If you come back to my video, which I've recorded earlier, see where I've got my mouse ready to see how the market will react to the 51.25. So that's exactly right here. Look at how at 52.50 we just had a refreshing order that, again, we were at 75, we're moving back to 100. So you see, it's very clear on a dome what what's going on. It's very clear how they're basically trading between this 52.75 and 53, and you know, sometimes it'll be so clear that when it gets to 52.50 here again, look how the bids just move up and move down. So if my entry is at 51.50 here, I'm looking at one or two ticks above my entry to see if there's any kind of pulling and stacking here. As you can see, they just moved higher. They're basically, we were at 100 something and it just moved to 348. So if I have any kind of an order waiting at 51.50, high odds, it's a good area to, you know, kind of target for an entry, right? Uh, Again, it's all about the market context where I'm seeing that the rotation here is within 4 to 5 ticks. So if the market just moves down very quickly into my entry, that would be a bit more than 8 ticks here. So that would be one signal where, oh, did the volatility just change, So that's little stuff that you always want to monitor because I'm moving around my cursor here with my mouse and I'm calculating how far I would want to have an entry. So it's the 53 now as the market's been moving up, you see, and at 53 how the 188, 185, it's still approximately the same level and one tick above me hasn't really moved much. So I know that that entry is a pretty good price. And the fact that the market's still rotating within 4 to 5 ticks, I'm at a good rotation factor where I think the entry at 53 would be really good, uh, knowing that that's approximately the volatility that the market's got at the moment. So it's always coming back to the same fact that you need to really read the current market volatility, the environment we've got, how many ticks when I have an entry. Let's say my entry is at 53 there, and if it hits 53, how many ticks does it move against me, or how many ticks does it go in my favor right away? So these are little nuances that, with more experience and with time and market screen time, you're going to start seeing these things and how they play out. Look at the 53. We're at 218, 215, 220 now. You see, again, it's basically confirming that traders want to trade at that price. And if we're looking at the one tick at the price right now, we've basically got, you know, uh, a scenario where we're trading 12, the last traded quantity, and then it just moves to 77. So we've got 77 that just got absorbed, and then the one tick above and one tick above, and then we start moving higher again. You see, it's basically me reading what the market's doing here. It's moving down two ticks and then moving back up 2 ticks, moving down one tick, moving up 2 ticks. It's that volatility factor that's really important to seize. It's around 11 o'clock here on a Friday, so it's not the best quick pace that the market would give, but it was a good way to see how now a bit later we're going to see how the market will move around, and we're going to see how the bids are pulled at a certain price here. We're going to look at the 41.54s and we're going to demonstrate here. I had taken notes how the market, I think, will move higher and then come back to 41.54, and we'll see how the bids were pulled at that price. So we're going to let the market move around, and I'll kind of walk it through as well. So the market does move higher, and you see where my mouse was. That entry would have been perfect. Look how that entry was exact, spot on, and the market actually moved like 2-3 ticks higher. And let's say the 52.50 again, my entry there, it only went 1-2 ticks, you know, and that's like only 2 ticks below, and it's moving higher. So I'm reading the current environment very well, and then I put an order at 50.75. That was just to demonstrate how when the market moved lower, that was approximately how far I would put my order to get some kind of an entry. My optimal entry would be around that level. But then, um, at before I just continue, if I was to enter at 50.75, now you need to also kind of understand where we are. We're very close to a high volume area on the volume profile, and me putting an order here at 50.75, the market has to come to me in a fast way for me to kind of be convinced that this is a really good area to enter, because or else we've got a lot of volume here which could demonstrate these guys who would have bought or absorbed the move higher start liquidating. So it's always a question of, if I put an order here, what's the market doing, what's the market environment, and if I have an order here, I need to either quickly bail out or manage this in a way where I don't want to see any kind of a move higher and then start coming back down and upticking one and downticking two kind of movement in this area, you know. So it's these little nuances that you always want to factor in, because it's not only about the volatility, it's about where we are in the context and also how the market comes to my trade entry, and that's called velocity. Okay, so now let's look at the 4154, because there's going to be an important nuance here where I will demonstrate it here. We're going to see 4154 around 60, 164, 156 now, 151, 146. Oh, did you see? Look how they just pulled all the orders all of a sudden. And that's where I'm demonstrating here, the 54.25, 114, 150. As we get close to it, look at how they're going to move around and pull their bids. Down to 120, 114, 91. Do you see? And then that's where you would want to look into going short. Again, I wouldn't do that in this environment because my goal was not to go short. But let's say it's an environment where the market's, short biased and it's got decent selling and all that. That's a signal where you would want to look to see if you could get a short position at that level, seeing those bids being pulled. Again, I'm demonstrating here again around the 54.50s there. And we come back to 170, 170, 151. Again, it's just back ticking like one or two, moving up one, back ticking two, moving up two. A very slow pace in this market. Again, very typical for a Friday. 180 at the 53.75s, down to 160, 159, 146. So they're pulling. The bids are being pulled, And on my snapshot, to be honest, when I see that, I just look at the snapshot very quickly, and to be honest, there's not a huge difference between the bids and the offers here being pulled and being stacked. So again, the context is telling me that every move down of 2-3 ticks, we're finding buyers. And then I put an order at 53.75 just to demonstrate how, with the current environment, that's approximately where I would want to put a buy order. Okay, again, the area is pretty much a good level, supported by the volume profile as well. Basically, a good area where the volume breaks, and I've noticed that one tick above, we're getting no major bids being pulled. It's roughly been around 180, 175 on the last 2-3 minutes here, and that's the kind of thing where you want to enter at a price where just one tick above it, you don't want to see major bids being pulled. The entry could be really still good if the bids are being pulled, but it's just really to optimize your entries when you're trading a thick market. Again, a thicker market, let's say, because a thick market, or really thick market, would be the bonds, but ES is much thicker than NQ. So these nuances that I'm showing around the dome with ES, definitely not the same way you would trade that with NASDAQ. As the NASDAQ's bids here, how illiquid it is here. You've got 3, 4, 6. You've got 3, 4, 6. You've got 11 just there, but this is really not meaningful at all. You don't want to trade the NASDAQ the same way you would trade the ES. So I'm moving around orders here just to demonstrate how I've noticed that the 54.75 with the move up here would approximately be the key price I would want to enter with ES. giving the factor that the market's giving me a quick calculation here of approximately 5 ticks, and I'm willing to have my orders 5 to 6 ticks further than the current price. And that's the context of this Friday. Very clearly, Russell has been the leader of the day. All right, so in the next section here, I want to cover rotations on Nasdaq. Again, using the most current volatility of the market, which clearly is very easy to spot here on my linear regression. We've got approximately 10 to 12 point rotations here on the Nasdaq. It's very clear how it will rotate, and then I take notes here on my rotations. Don't forget, I always emphasize that the market pace and volatility does shift throughout the day. So Nasdaq will always generally rotate within a certain number of points, and then when the volatility picks up and with the correlations of the general markets, you've got here ES that's correlating approximately within a certain number of points, and you want to define how far you could put your entries, and if all of them kind of have this volatility shift at the same time, it definitely gives you an edge where you could highly expect Nasdaq to rotate within more than 10 points, and you need to be very nimble in your entries, because if you get your entries wrong, you need to be very quick to scratch them, because the market could really go 15-20 points against you very quickly with faster markets. So I'm taking down notes here, my rotations, and then it's again quickly for me to not forget them, because after having a market shift, it could easily, you could easily get lost in where you were. So let's look at them now. I've got 13,235 to the downside, and then we've got 247 to the upside. 259 is another level that I just want to see. As you can see, there's a certain number of points between them, and you're able to filter where you would put your entries. So let's quickly look at the pace of this market. We've got a tape that's very fast on the Nasdaq, which is good. And then if we were to look at the pace of the market, which is on my right and not, we can't see the screen here, it's trading 300 to 400 per 15 seconds, which is really good conditions to be able to scalp. You just have to get the market direction right. 259, so we went over 259. Look at how the market is down ticking to approximately 3-4 points above that 259, which is clearly telling me that if I was to wait for the market to come to 259, I will not get filled. The fact that I'm not getting filled is already a clue for me to be a bit more aggressive, and the market's got a tape that is sweeping higher, as we've swept from 35 to 59. That's more than like 20 points within 1 or 2 minutes. So in this kind of condition, I'm not looking to short. This is a very typical market that's got a lot of strength, and I'm only looking to enter long positions. So I'm jotting down, we've got 1320 271, which was an extension there. We got above the 271. For me, as you can see here, I've got my, I don't know if you guys saw that, my mouse was around the 272s. So I would want to look to see if the market comes back to the 272s, and as you can see, it barely wants to move lower. Conditions very clear not to even look to short. So this is an important nuance I want to make sure we cover. A lot of traders are telling me I will short, let's say for an instance, 13 to 85 is some kind of a resistance on the 30-minute, I don't know, 30-minute chart or candle, whatever. And all the Twitter guys are basically coming up with, oh, I think 285 is a good level to short, and maybe the market will kind of reverse at that level. That's basically trading off price, trading off a specific level, not incorporating market context, the speed, the velocity, the pace of what's going on right now. So let's say some trader would say, I think the 13,285 is a major resistance, and the market should kind of at least give us some kind of a reversal from there. If you're a dome trader and you understand the nuances I'm covering here, you will not put a sell order at 285. In this quick tape, in this pace that we've got here, all you are looking for is an entry long. Okay? So that's the nuance and edge we've got as order flow traders and traders who are able to read what's going on with the tape and what's going on with the velocity here, how the market's pace has just totally shifted in the last 3 minutes here. Okay, in the last 3 minutes, we've got a move from 235 to 271. Market that's basically making new highs in the day. Correlations, ES is doing very well. We've got a bond market that bounced off the lows and is range bound, so nothing negative on the from the bond market here. So again, the correlations and the contacts is clearly not telling me to look for shorts. Okay, so let's move on. So 271.59. Let's just look at the rotations. So we're at 78. I would only look to buy approximately at the 66s. Okay, so that was my quick way to. I didn't buy the 76s, but let's say if I really want some kind of a move down and an exhaustion from the sell side, I would only look to buy 82 70s, let's say. We were trading on the 82s. So as a dome trader, as a scalper that's reading the market environment, that 82 was the value. That's what we call value. The relative value is that 82 was approximately the level the market rotated a bit for the last 15-30 seconds here, and that for me is value. Value is too high, or it's still seeking to see what's value going to do at a higher price. So if we're at 82, again 82, we went approximately 3 points above 82, and we're retesting that 82 level, and now the market's a bit lower than 82. For me now it's about that 71, how the market reacts at the 71 first, because I've defined the market rotations and I know that the 71 is an inflection point for me. Again, 83 has been another level, so 83, 95s, 07, 19s. So the market's still rotating between that 83 and 95 section here. So being at 86, I would only want a market. It's always about not getting, trapped and not getting really out of context, because if the market's at 86, I would only want to put an order around the 74s. So let's say the 74s, that's my entry. We're at 78, 74s. As you can see, the market went from the 86s and went only down to like the 78s. Initially, I said I would want to buy the 74s, right? So let's see how the market reacts at the 74s. So let's say my order was at 74s, and you see I just want to buy a bit lower, around the 71s. Okay? It's clearly a market that I'm reading the rotations, and it's not going to come to that level. It really wants to go higher. We've got a market that really does want to go higher. So if it's coming from the 86s to 78s and I can't even get filled at 74s, that's already an important clue. Okay, that's telling me that my order is a bit too far. Okay, although I've calculated it and I'm noticing the rotations, the market getting to 74s is not even something, it's not even there. You see, it stopped at the 77s and comes back, and then 83s again becomes an inflection point. So that inflection point, the way I explain it is, that's the relative value. That's the value of the now. That's how value is perceived from the market makers and the market here at this current environment, at the current market structure that we've got in front of us. So Being at the 83s, again, if the market would sweep through the 83s and get to my 95s, just to give you a quick context of what I would look for, uh, goes through 83s and gets to 95s, for me, it's a market that's looking for value higher. Okay, so coming to 95s, if it comes back to 83s, I would not want to buy the 83s. I would rather buy the 74s. You get what I mean? It's all about if it's run through the 83s to 95 very quickly, it comes back to 83, value is perceived a bit lower then. You know, I'm highlighting the 295s there because that's how the market just stopped at that level. You see how one tick, it only did one tick above the 95s. It just demonstrates how I'm reading this market very, very clearly. Okay. Um, let's just see if I could demonstrate here when I'm just going to fast forward a bit because we're at the 13,295s, and you're going to see how the 307s and the 319s will be the next targets. Look at this. So the market has done a move higher. We've passed through the 95s. We're at 13,300, round figure, round number, right? Look at this now. Again, it's all not only psychological levels, but it's just telling me how. Look at the tape. We've got a tape where, let's just give it 2 seconds here. You know, we're at the 175s or at 125. We're back to one. If you don't look at the domain, just look at the tape. 99.25s. Okay. I was probably taking a screenshot here, so it's just gonna take 2 seconds. So we're at 01s. We got to the 98.75s. We got 98.75s had, you know, some how you call it, block orders. There are 5 traded at the 98.75s, and the market moved higher. You see, we're at 250 now. Block order at 250. 250, but we were basically trading lower. So it's quickly a way to sometimes, you know, when the market is giving you so many blocks. So we've got some blocks here at the 150s and 175s. Let's see, and then we've got some sweeps, and the market moves higher. You know, and look how now the market is going to get to the 307s. Look at this. Remember my target 13307 here. Again, I'm saying target because I want to see how well I'm reading this market. We're at the 306s. The market has stalled, and it will most likely go through us. As you can see, it went through us around the 309s. And look at how the market stalls around the 307s. And we've got a tremendous inflection point at the 307s. Okay? This is because I'm reading the market rotations perfectly. You understand? This was a very good contextual day where the rotations were very clear. To be honest, some days it will be difficult. So what you have to do is you either have to be a bit more patient. You want to make sure that the pace of the market is good enough. If the pace of the market is not good enough, that's where you're going to get some you know, the rotations will be a bit off. I always want to make sure that I'm not in a rotation that's small, because in NQ, if the range is small, and a small range for NQ, so if I was to give you guys a good example, a 5 to 10 point range within NQ is small. You want to have a range that's more than 10 points, and you really want to be careful when the range is more than 60, because at that level it's super volatile, and you really want to have your entries only 10 15 points away from the current market, from the current price basically. Okay, so if that kind of helps, it could definitely be a good way. And again, I go into more examples and explanations of this in my coaching videos that I have with traders. Last but not least, I just want to come to an area where the market actually hits 13,319 as one of the extensions, basically. So again, emphasizing the fact that we're reading the markets with the rotations, a certain number of points from the current price. If you've looked at it, our inflection point is a 13,307. Market's really stuck at this 304. hits the 307, look, and bounces right off. 304, 307, that's like a really tight range that we've got at the current moment. So as the market has only done what 3 points lower than our 307 and has not even moved lower, that's already a quick signal for me to not look for shorts, because we've got a market that's just looking for buyers that are coming into the market and basically are ready to buy every dip. It's been the case with ES, it's been the case with Nasdaq, and look at how the market here will get to 13,317 here. Wow, and it just stops right there. I even demonstrated here. It did 2 ticks above 13,317. You see that? And look at the velocity. Now the velocity, we're moving lower very, very slowly. So that's already a signal. The move that's going down very slowly and the move that's going down, or sorry, the move that's going up very slowly. Little nuances that you always want to pay attention to with NASDAQ. We're getting some, we got some blocks that came in and then we suddenly got blocks that bought on the NASDAQ. We've got here buyers and sellers. We've got a huge block uh, purchases at the fifth, and it only did like three ticks to the downside. So again, look at the blocks come in, and we passed through our 17 now. So you remember I said 19 here, sorry, and look at the 19s. Look at the market. Only did 2 or 3 ticks there. So this whole concept of really reading the market correlations, the market volatility, and the ranges, how a certain number of points coming back and coming, sorry, certain number of points rotations to my entry, the concept works very well for faster markets. You really need to have a way to filter that. And I found my way because I've noticed that me not reading the dome, if I'm not in front of the screen all day and not reading it, I'll just take the nest. What I'll do is, my way of doing it is I'll just concentrate for 10 minutes. For 10 minutes, I'll find those ranges. I'll see what the pace of the market is, because the number one thing is the pace of the market. I want to make sure the pace is good, optimal, ideal conditions. And then once that's good, it's to define what the rotations, number of points I want to put my entries, where I want to do business basically. If I get that right, and then I'll start gradually putting my orders to bid at certain levels. So now market at 319, I would only want to buy at the 11s, because I don't want to be too close to the market, because the current market volatility is telling me that if I was too close and I would want to buy the 318s here, let's say I would just put my order here, it's too close and I would get run through very easily. So this is something that I use when I want to put my entries at certain levels, and those levels have to really be fine-tuned and really have to make sure that it's well defined with the current volatility of the market. Okay, so hope that helps. And I really wanted to put this video up because I get a lot of questions on this. Without really going into the full depth and information and the details here, I wanted to make sure that it was clear. This way, when you ask me these questions through Twitter or by email, I'm able to kind of send you guys or refer you guys to these videos, and these videos will be able to demonstrate how to trade thicker and thinner markets, and to make sure that you're kind of understanding my overall market understanding and my trading style, because for me the volatility, the velocity, the pace of the market, these are really important concepts in my day-to-day trading. All right, so hope that helps. Have a nice day, and don't forget to hit the like button and also to give me feedback. Have a nice day.